What's going on? My name is Drake Van Hall. I'm the owner here at Performance Financial. Today we're going to learn 6 items that not everybody talks about. Now, some of them are a little bit more common, but the goal here is to teach you, hey, these are some tax saving items that can really provide some serious value and really help save come tax time. So first off, I want to talk about taxes in general. So whenever I'm talking to clients, they're always like, oh, taxes. Nobody likes to talk about taxes. They're boring. And I always say the worst part about taxes, however, is just not knowing. It's not knowing what to expect. It's not knowing how much you're going to have to pay. Because most people don't do good planning when they're coming to taxes. So we're going to try to give you some information to make tax time a little less scary. And hopefully it can make you, a little bit more confident as you're going into the upcoming tax year. So to start off, business mileage. Now, this is a semi-common item that people talk about, but it's not one that people track on a very good basis. And also, as I'm going through this, I'm going to tell a little story about my buddy Clarence. I'm going to use him as a little bit of an example just to kind of show some of the experiences that clients typically have, especially when they come in and they bring some of their tax information. These are some ways we can find some extra value, find some additional write-offs that they didn't quite know. So we're going to explain the topic, like business mileage, but then we're going to kind of throw in a real-world Clarence example. So we'll start with business mileage. So for 2021, you are getting 56 cents per mile that you drive for business. So this does not mean you're at your house and you drive to your shop or wherever you're storing all your equipment where you're meeting all the guys for the day. That's commuting miles do not count, but you're driving your trucks out to location, you're going to have coffee, you're having lunch, dinner, whatever it is. Those are all business miles. Maybe you're going to a seminar in a different state. Those can all be counted as business miles. And there's something that you should be tracking. QuickBooks Online has a really good feature. You can track those miles. But there are tons of apps out there that literally all you got to do is just click your button when you jump in your truck and it'll track out your route. And so at the end of the year, you can have some decent information on what those business miles are because they add up. So in our example here, Clarence comes in, he's got $75,000 of income, and he kind of did a little estimating in his own head on what he thinks he's going to owe in taxes. So first thing we do is we sit down with Clarence and we go, Clarence, how many miles did you drive this year? And he kind of sits down and he goes, man, I drove for this and this and this. And he kind of picks his brain a little bit. And he goes, I came up with probably 3,500 miles. So remember that number. We'll kind of come back to that at the end. But he's got about 3,500 business miles that he drove. The next key piece is this home office deduction. Now, this doesn't apply for everybody, especially if you're going on location and you have an office space available. But if you don't and you are doing a lot of work out of your house or you're storing a lot of equipment in your garage or maybe some inventory or things like that, the IRS gives a nice $5 per square foot deduction up to 300 square feet. So if you're using an office, right now I'm sitting in my home office actually, and it's about 150 square feet, something like that. I can take that $5 a square foot times 150, boom, instant deduction. It was never cash out of my pocket. So it's a great deduction because you're already paying for your house and your electricity, and that's kind of what's going into that $5 a square foot. The IRS is saying, hey, we kind of are guessing what your depreciation is. We're kind of guessing what your electrical bills are. So some of you might have it to where we want to actually figure out what the actual expenses are. If maybe you have a shed that you're storing equipment out on your property or something like that, it might not be as beneficial to use the standard home office deduction. We can dive a little deeper into that. But the home office deduction is a commonly missed thing that people go, well, I never paid for anything out of the business, so how am I going to get a deduction for that? So we'll go back to my buddy Clarence. Clarence has a 20 by 10 foot space in his house that he uses exclusively for business. He meets clients, stores inventory and things like that. So he's got 200 square feet of home office that he's essentially using. So again, 200 is that number we're looking at. It's not cash that he's paid for anything, but that's his home office and what he's using. The next thing that we will typically see is cell phone and internet. Now, you might be going, well, yeah, I already pay for this. A lot of times you're not paying for this out of the business. Maybe you started the business now. Maybe you're 10 years down the road and you go, man, I pay for that. We're on the family plan at home, so I pay for the cell phone through that. Same with your internet. You probably pay it through your own personal account. These are business expenses. We live in a current day where you can't do business without having a cell phone and without having internet available for you to quickly answer calls, send out messages, do marketing, maintain your website. You need those types of services. So a lot of times what we'll do is we'll say, okay, a portion of this internet is business related. We spend a lot of time advertising and on Facebook and those different things where we need and we require to have that internet for our office. Secondly, you can look at your family plan and you can say, look, I have to have a phone for business. So we could parse out just your portion of the phone plan and say, this is a business expense. And so we can bring those expenses back into the business. So our buddy Clarence, he gets everything through one provider. He pays $150 a month. But thinking about that, he needs to have internet to run his business, and it's just him on his phone plan, and he needs to have his phone to run his business. So there's an additional $150 a month that he didn't know that he could deduct. The next cool thing that we can talk about is prepaying bills. So when we think about prepaying, we think about, hey, we just created an asset that we get to use in the future. When we're thinking tax-wise, though, most small businesses and contractors that are under 25 million, the IRS allows you to be a cash basis taxpayer. So one of the things to think about when you're a cash basis taxpayer is whenever money leaves your hand, that's when you get an expense. Now, what can happen here too is, you can have accrued wages, you can have some things that, your payables, those don't count as expenses because you haven't actually paid out cash. But let's say at year end, you've been handling cash all year, you don't have any payables, and your insurance guy calls you up and he goes, hey, next year's insurance policy is going to be X amount of dollars. If you have the cash available, we can shell out that money today and we can utilize that as an expense in the current year's taxes. So Clarence, his insurance guy called him up in November and he goes, hey, Clarence, next year's insurance policy is going to be $2,000. You want to just prepay it now? You might save $500 instead if you go monthly. So Clarence goes, yeah, I'm going to get that little bit of savings. So he pays $2,000 in November for the following year's taxes. Or the following year's insurance. Well, he prepaid that from a bookkeeping perspective, but from a tax perspective, he's going to get a write-off that whole amount in the current year. Next, we have retirement plan funding. Now, this can be an interesting topic for some people. Some people don't want to save money for retirement. They just say, my business is where I'm putting all my focus and effort. But this can be a really tax-efficient way to do a couple different things with money. So one, it's going to be growing, tax-free. And two, you're going to be getting a deduction for funding this. So business owners can put up to $58,000 into their retirement account or 25% of net income. So let's say your net income is $100,000. You can only put in $25,000, but you can contribute this to a SEP IRA or a retirement account, essentially. These are pretty easy to set up. They don't have a ton of fees. And you can sock away large amounts of money that, one, save you taxes today, and two, are going to get some tax-free growth for when you do retire. So our buddy Clarence, he goes, hey, he's just been thinking ahead. He hasn't been thinking of tax savings. He says, I've been putting, this $1,000 a month into a retirement account, but I thought I've been doing that personally. It's not really been through the business. It's been out of the pay that I've taken out. And I go, Clarence, that $1,000 a month is actually deductible as retirement contribution. Let's make sure it's in the correct account, and then we will deduct that. That's an additional $12,000 that we just found. Finally, we can come down to to figuring out S corp versus sole proprietor. A lot of people call it LLC, and some of the major benefit here is we can really save on self-employment tax. Now, Clarence, he goes, I'm not ready to be an S corp. I'm a sole proprietor. If I'm not there, the business doesn't run. But at least we've talked about it with him. And we said, okay, well, if you do had a couple employees in the future, we had some assets that are really able to generate you some income, maybe we can move you to an S corp in the future. And really what your savings is all in self-employment. So when you worked your job in the past and you got, a pay stub each week and you went, I worked 50 hours at $10 an hour. Why didn't I make $500? Well, they took out some withholding tax for your state, maybe, and federal withholding. And they also took away some payroll taxes, so Medicare, Social Security, and things like that. You pay half of that as the employee, and the employer pays the other half of those Social Security and Medicare taxes. When you're self-employed, you get the benefit of paying both. So they tack on another 15.3%. So if we can move you to an S Corp, take a reasonable wage, the remaining profit then is not subject to that 15.3%. There could be some serious tax saving opportunities in that. So kind of sum some of this up. Let's take a look back at kind of what we've done for Clarence. So at first, he came in and he goes, "Yep, made $75,000 this year. Had a nice strong year." And he goes, "I think I'm going to owe about $25,000 in total taxes." And he's not that far off. Usually, it's about a third when you're self-employed. So first we go, okay, Clarence, you had 3,500 miles. Let's go apply that 56 cents per mile rate to it. Well, now we just found another $1,960 in deductions. Next, we go, okay, Clarence, you had that 200 square feet in your house that you use as home office. You get $5 a square feet on that. Boom, there's another $1,000 in savings. Next, Clarence is like, well, we got that cell phone and the internet. That was $150 a month. Boom, now we got $1,800 in additional tax savings. Finally, he prepaid those bills. That's $2,000. And he was socking away money in a retirement account for an additional $12,000. So he went from owing around $25,000 just for federal to now he has to owe about $16,000, $15,000, somewhere in there. So we created $10,000 of tax savings just by finding those additional deductions that Clarence didn't even know were possible. And really, he's saving from the self-employment tax as well as just lowering his income on his personal tax rate. So Clarence really did a good job bringing some of that in and having some clean information. But just by asking the right questions or having some of that knowledge, he could have been able to, one, go, crap, I don't have $25,000 to pay, and just be a little bit more prepared with some of that information when he's going to have his taxes come in. A good CPA is going to ask those questions, but a lot of times they're just going to go, here's the information, prep your tax return, see you next year. It's not what we're about here at Performance Financial. We want to take that next step to really help you guys get in that best tax position that you can possibly be in. And these are some of those little tips and tricks that can really help drive value and make sure you're not paying a penny more than you're supposed to. So if you have any questions, feel free to reach out. We do tax planning all year round when we do our bookkeeping, when we do our monthly meetings and things like that, because we know it's important. We know it's a fear for people, and we want to make sure that they are paying their fair share, not a penny more, and that they're getting extraordinary value and good advice when they're going in. They're not walking away where there's potential money left on the table. Small business owners need that money. It's important to them. And so we really see the value in that too, and helping them to be as profitable as absolutely possible. So if you got questions, let us know. We'd love to work with you. We'd love to help you out. Thank you guys for listening and appreciate it.